Designing your life plan and securing your financial legacy. Tendayi Ndoro. Tendayi is an independent mortgage and insurance advisor who is passionate about helping her clients design their life plans. She has worked in retail banking and financial advisory for over 20 years and is passionate about helping her clients find financial solutions for everyday life. She will be sharing a message today on designing your life plan and securing your financial legacy.
So, and I'm so grateful to the speakers that have come before me and done all the lead work, just leaving me with an easy task of here you are. How do you now design your life plan and actually secure your financial legacy? Not having been scammed or, having built up this big empire and towards the end, it all becomes nothing. But, we've got these vision boards, we've got these dreams, these desires, this wealthy place that we're all aspiring to, what good looks like during our time on this journey of life. And the question I will ask you after this 3-day conference is what's on the cards for you? You are a chief architect together with co-creator, CEO God, then you are next partnering with him. You can build the life that you want to see through the choices that you make. Recognizing that there are no things as free lunches. You've got to put some work in. If it takes builders to build a house, for you to build anything, it is actually going to require you putting some sort of work into it. Now, one of the analogies I love to use about building your life plan is looking at, okay, what is at the core of my building? If you remember the story of the 3 little pigs, I'm going to huff and I'm going to puff and I'll blow that house down. Storms of life come, changes come, things come to try and knock us down, to test whether is this building strong enough, and one of the tools that one can use on your financial journey are things like, protecting your money. Firstly, getting an awareness. So already that conversation that Blessing gave about scammers, that is a foundation, a firm foundation. Whatever we do, we're not going to be overexcited and not ask questions when we're parting with our money. So it's important to protect anything that you're building. We have things like life insurances, policies, private medical insurances, and I'll explain a little later why these are foundations in your house, in your building, in your structure and your dream. Things like family income benefit plans. You might have seen words thrown around. What are they? Rainy day emergency funds, savings accounts. They're a shield in times of trouble. Indemnity and liability insurances. Sally talked about that yesterday. When you're setting up your business, things go wrong. Sometimes you'll get the work wrong. You'll give wrong advice. Someone want to do all sorts, sue you. Loss of cover, loss cover. Buildings insurance, if you have a flood, if the roof falls down. So your foundation is what have you got there? And then we've got our walls, Now we know how we're making our money. There's the job, your 9 to 5 that you're doing, the businesses that you're going to step out and go for, your asset generating income streams, the royalties, that healthy cash flow coming in regularly. That's one wall. Our choices in our behavioral patterns through spending money is another wall that's going to determine the legacy that we leave behind, Part of it is probably helping others back home, sending money, but to what extent, is that still leaving space for self-care? Is that still leaving space for actually checking out, is what you're saying you're doing actually being done, bills being paid? Entertainment, soft life, social life. You need to look out for you. Once you're gone, you're gone. Lifestyle upkeep, childcare, all sorts of things that we need. That's one wall that you're going to need to master as you're building your legacy and the choices that you make there. What philanthropic projects are you going to support? Are you going to dedicate your time to? Time is money. The borrowing money wall is another one, and we spoke about mortgages, credit cards, loans. I'm going to tell you a little bit what's what on there, but this is another key wall that we're going to need to understand on our journey. And Haji last night was talking about the power of your agreements, in your relationships, in your credit agreements, even just parking your car in a certain slot for a certain time, that can affect all these other areas. My gosh, because if you don't meet up with that agreement, it's going to have repercussions on other areas within your finances. And then growing your money, investing your money. Alan was talking about, sitting in the bank, your money, you're losing money. So doing nothing is not even an option to just say, well, I'm just going to sit here. You still got to do something about your money, because inflation, especially now, is rife and it'll always be there. So you have to make some choices. You can't be so lazy that you don't decide to do anything. So as part of accessing your wealthy place, if you are having an expectation that you're going to be alive in the future, what do you want your retirement to look like? What do you want next year, next summer to look like? Are you going to do something, put something somewhere that's going to allow that to happen? And of course, the roof is how are we going to pass it on? Man's days are numbered on this earth, but, the decisions we make can mean that those who come after us, it might be our own children, it might be our family, it might be our community, can actually benefit from the work and the days that we have spent on this side. So we've got things like your wills, your trusts. Alan talks about inheritance tax planning and all sorts of things that they do, their fancy smancy products. But, this is where getting counsel, getting advice from experts in their field is key. Now, how you navigate and manage these choices ultimately has an impact on where you get to reach on the self-actualization. I don't know about you. As Yvonne was speaking last night, I thought, wow, this is it. The reinvented you who is coming out of this Understanding Money conference. Right there where, the creativity within you is flowing. You're able to problem solve. You understand, why am I here? And you just manifest. You've overcome, the self-esteem issues. You've overcome, being able to find your network and people who respect you, appreciate you. You've got love and a sense of belonging in your community. You understand, I've got this trade, I'm able to do this. You feel safe and secure. You've got a home. You've got a roof over your head. You've got food and water to eat and drink. Your mindset actually matters in all of this, on how far you're going to go there. And I'd like to say, probably throughout the journey, as Stella was saying early in the morning, you might be up there and something will come and it'll drop you down to another level. But you always have a choice, regardless of where you are on that hierarchy of need. And the choices you would have made along the way, which is what we're doing in designing our life plan, can have a significant impact on how we will fare on this journey. So when it comes to borrowing facilities, the lower the rate, the better it is for you. Less expensive is better. Alan was talking about investments and how there are fees in that area, and you want to see that the cost of doing investments are as low as possible. The same applies with your debt. Are you going to go away tonight or this afternoon and just begin to look at, whoa, how much am I actually paying on my mortgage? That's a big debt. And if you've got a high interest rate on that, nowadays, it could be the difference between 200, 300 pounds a month compared to potentially a more secure fixed rate, depending on how much you owe compared to the value of the property. Student loans, most of us for education, you needed to borrow money because, that's how it was funded. You didn't have a bank of rich mom and dad who were able to just pay for the fees ultimately for you. But is that the same story you want for your children? Are you going to put something aside for them so they don't have to come out of university with debt? Payday loans, very tempting for many people when times are hard, but a very expensive way to borrow. Short term. Is it a time to relook at, okay, what can I do here? How do I need to pivot? We were being told about the ability to pivot. Once you start getting to that place, there's something's got to give, something's got to go on your outgoings, and some extra income has to come. There has to be some major shifts and evaluations. I'll talk a little bit more about mortgages and stuff. So Chennai spoke about building your legacy through property and just explained numerous options there that I hope everyone's going to get in touch who thought, I want to get involved in this, and why it's a good idea is, you need somewhere to live for starters. And if you do nothing but just buy your house that you live in, at least you know that the next generation will say there's a house that mom and dad purchased, and they can pick it up. They're not going to be concerned about places to live. House prices tend to appreciate over time, and those who have an appetite for risk, and it's not for everyone, by the way, sometimes take some money out during their working years to use that to go and buy another property. And that's how you get to start to multiply those properties. One buys another and another and another. Other advantages that you can actually see your asset. Bricks and mortar, you can see, you can go and you can touch, you can put somebody in there. So there's many strategies that you can use to allow money to work for you. Now, borrowing to purchase a property, there might be people here saying, okay, what's available? How can I get onto the property ladder if you're at the beginning? So generally there are many different types of mortgages, but typically interest only, capital repayment. Capital repayment at the end of a term, that mortgage is done and paid for. An interest only mortgage, you are only paying the interest for the period of time that you've got the debt. So at the end of the term, you need to pay back, or the house has got to be sold. So when times are hard, even during COVID, I know some people dropped down to interest only and said, oh, that's a lot better. Where a repayment, I'm just going to throw figures out of the air, might be £700 a month. On an interest only, it might have been just £200 a month. And when things change, it's important to review that, because £200 versus 700 is more comfortable. It leaves you with more disposable income. And if you're not reviewing your finances constantly, you can get to a point where retirement is knocking on your door and it's like, what do I do now? I've not paid this mortgage off, so I'm not going to have a place to say I can live debt-free. So these are the general two ways of borrowing on property. And shared ownership. Some people say, oh, it's terrible, shared ownership. Oh, there's all these cons. Yes, there are cons, but it's actually a very good stepping ground for many people to get onto the property ladder. You own a share of the property with the housing association, who typically in the UK own the other share of the property, and they ask you to pay a small rent, to pay for the difference that they own. And most of them allow you to staircase and own more of the property as your financial circumstances go better. And it's a perfect product for, say, for instance, single parents or people with large families need a big house but can't afford that £400,000 mortgage. And if you get one on a shared ownership, hey, you got a place to live, part of the house is yours. Of course, any home improvements you put into it, you share with the housing association, but many people then end up putting a premium on it when they end up selling it. And if you live in a place like Milton Keynes, they go like hotcakes for sale. So if you put it on the market today, tomorrow it's gone, because Chennai mentioned England is an island. There is demand for housing. There's not enough houses for the people that are here. Equity release mortgages, Mo spoke about that yesterday. That's for most people when you're in later life and you're house rich but cash poor. There are ways to actually unlock some of that money, and it's recouped by lenders at the point that you pass on. Further advanced mortgages are like borrowing more on top of what you had from your existing lender typically, whereas a second charge mortgage is going to another lender. Perhaps your credit score has changed in the period since you took out your mortgage, and actually you had a parking ticket and you didn't pay it, and so now there's a default on your account and your credit score has gone down, but you desperately need some money to do a little extension or to do something on the house. There are people who will allow you to borrow. Let the main lender be the main lender, will come in second, but of course they're going to charge you higher interest rates to do that. Shared equity mortgages are schemes like the Help to Buy scheme, where I think a lot of key worker schemes as well fall under that category, where someone gives you a percentage of money to help you buy the house, but they also want a share in the property appreciation value. So if they give you 20% and you bought it for 100,000, 20,000, when the house is at 200,000 and you decide to sell, they want 40,000 because they want it based on the value of the house. And it's a very respectable way to actually get onto the property ladder as well. Just look at terms. Things like key worker schemes, they didn't charge you any interest for that money that they gave you, whereas Help to Buy scheme, it was interest-free for 5 years, which is really good. And at the end of the 5 years, you can either pay them off or start to pay the interest that is due on that money. And then, of course, we've got right to acquire, and I missed out. Oh yeah, right to buy is there. Right to buy and right to acquire, where if you've been living in a council house, oh, good news for you. You don't even need to save a deposit. Once you get your right to buy, the council gives you a heavy discount on that property. So you literally, no moving costs, you get a discount on the house, and for 5 years, if you sell it, you'll have to pay that discount back in proportionate amounts. But after that, that discount that they've given you is entirely yours. So amazing way, to get onto the property ladder. And right to acquire applies to housing associations where the discount is significantly lower. And there's been a lot of talk in the news lately as Boris Johnson has said, right, I want to move all housing associations to give them the voluntary right to buy. So, they could get as much discount as council houses if that bill is passed. Now, that's borrowing. We know what we're doing with our properties. I just want to talk a little bit more about protection and just get into it a little bit more, because I think it's so important, particularly in the time that we've just been, the pandemic. It's been a time of sudden loss for many, loss of job, the shaking. It's like the nations have been shaken, and we ultimately realize that the most important asset is you're the most valuable. You're priceless, There's no duplicate of an individual out there like you, and you were actually bringing some money in. It's a key. Protection policies is a key that allows you to secure the things that are most important should things go wrong. Most of us recognize that this mobile phone, when you take out a mobile phone, I've got my mobile phone, I need my mobile phone insurance, and we pay £10 a month or so to just protect this form of communication, because we know that, hey, my money is coming through this phone, or if I have to buy another phone, that's going to be £500, and we're prepared to pay £10 a month for. But how much are actually you bringing in every month? How much are you bringing in every year? I want you to write your salary down there. You know it. Put it down. What value do you put on that? What are the dangers that could come in? Stop that money coming in. I love a verse that says, the prudent see danger and take refuge, but the simple keep going. It won't happen to me. I'm always well. Anything can happen. Put on your whole armor, believe for the best, but be aware that there are dangers on this journey. No one knows what tomorrow brings. In all this wealth creation, I like to say, if the Lord allows it to be, I want to do it, and I'm going to do my very best even as if today was the last day, you need to know that you have done your very best and you've gone for all the things that you wanted to go for. And what I love about protection is it's something that can still spell good news to anyone who comes after you, even in scenarios where things have not quite gone right. Trusts, powers of attorneys, wills, also strategies that are really important, to ensure that what you actually desire within you as an individual will actually take place and happen. Because I tell you, your money can end up going to somebody who you didn't intend it to. I'll tell you a little scenario of, say someone passed away. They were in a relationship with someone, had 2 children, another child that they'd had with someone else in the past. Blended families are very common in the times that we're in. And you go through trials and are separated. Someone has been on Tinder, Swindler, and online dating. These are scenarios that happen to people, and it causes the relationship to break. Last night I was talking about who dropped you. And you struggle with these children for 2 years, 3 years on your own, but you have not reviewed, or you've not put any of your house in order, you've not put any of your insurances in trust for the children or for anything, and you're still married, and sadly you pass away. Guess what? Your spouse is the natural benefactor of everything. So regardless of that, you were separated. He wasn't. He had moved out of the house, staying with the girlfriend, or she had moved, staying with the boyfriend, whoever it was. What you wanted to see happen with the premiums that you kept paying regularly could still not happen. So those trusts, family members, I know in Africa it was so common that I don't know if it's still happening now, that if someone passes away and they were the oldest, they were a man, and the brothers will come and say, hey, this was our brother stuff, and can leave the children high and dry. I've heard stories where this has happened. So put wills in place, put trust in place. No one knows when that time of promotion will come. Now the argument, it's too expensive. What value do you put on you? What value? I want you look at your income, look at that salary. How important is that for it to keep coming in? Now, I wanted to share a story, but I think it'll take a little time. I'll put a link in the chat later, and as I send you an email at the end of it, I'll put the case study on there. Beautiful couple. They're still around, and he was diagnosed with a condition that was terminal, and when they took out their mortgage, the advisor advised him to take out some income protection because he was a self-employed courier driver. It's a true story. That's on video, which I'm just summarizing. And she again worked at a local hospital, quite an intensive job, and you can imagine any news about health, it's a blow in that moment, but you've got to overcome adversities. And as Stella was speaking earlier, you can make it out of that, if you're one of the blessed ones who are given that opportunity to. But the reality for that couple is they thankfully had decided to put some money that was within their allowance. They saw the need and the value for this cover, and so they took out some income protection cover, and they took out some life insurance and a little bit of critical illness. And when you hear them and you just hear them bantering, they're laughing. I mean, he has a really serious condition and she's sitting next to him, and they can talk and they can dream and they can plan. She stopped work and is just focusing on the time with their family, because ultimately, I don't know about you, but My wealthiest place is with my family, is with the ones that I love. It's being able to spend quality time. If your life, if you could sell all your assets and save your most loved person who, or think of your loved one who's gone away, you would want to bring them back. you know? So life ultimately has the most value. But some of the choices, some of the decisions you make, I hear people say, oh, someone told me, I wish I'd have put that in place. Or I didn't know that you could get this sort of cover. It's the difference between it being game over. Okay, so you were building this, now we're going to have to sell this. Now we're going to have to do that. Versus actually there's some money coming in from somewhere else to look after you when things go wrong. You are the business. If you can't get out of bed in the morning, and if you're not able to go to work, if you're not able to, because your body just, just can't. It's not because it's for the will of wanting to, but you are just not able to. And these afflictions come to test us. No one picks what comes their way. So I just want you to realize that you are that most important asset. And what income protection or sick pay cover does is it, makes sure that in the event of you not being able to earn money through sickness, that insurance provider will pay you a regular monthly premium. And our job really is to talk to our clients, understand what the limits that you're allowed to based on your salary, what benefits you already get and what incomes you get already, and how do you bridge the gap. Many of us rush out and are doing contracting work. I've started my business, I'm self-employed, fantastic, brilliant, but guess what? You're not earning more money because, now you've become the regulator. You have become the employer. You have to put these things in place yourself. You have to see the dangers that you now face whilst you're building, whilst you're dreaming, whilst you're going for it on your own. Mortgage payment protection covers a mortgage bill upon sickness and ensures that the monthly mortgage will be paid. It's like accident, sickness, and unemployment for a mortgage. I still prefer income protection because it looks at the whole picture. Yes, mortgage is paid because you can lose your home if your payments aren't kept up. Your home can be risk of repossession. And having worked so hard, if a property has to go to auction, most of the times you actually come out of that owing money in debt. Although I put a deposit when I bought it and I've been paying it for 5 years or 10 years and it's gone up in value, but you could actually still at the end of it, because it's a forced sale, because you haven't paid it, lose money and be lumbered with the debt for longer than you need. That doesn't need to be us here, because we understand that there are things that we can put in place when all is well and we're smiling and we're fine and we're happy. Critical illness cover pays out upon a diagnosis of a critical illness. It pays out a lump sum. That gives you choices. And I remember one evening dancing here, with one of my clients who had a large payout for a cancer diagnosis, and she couldn't believe it. She was like, wow. That was bad news that had come. In the Christian world, I say what the enemy meant for harm, God has turned it around for good. It was a way to receive that money in her view, and she was super excited. And it was just a few years before that we had set that up. So I know this is probably speaking to someone who hasn't put those things in place, and it's like, oh gosh, I keep saying I'll do it tomorrow. You are the most important person. Without you, nothing will function. You are the one that God is using in this time to do everything, to dream, to architect, to create the world. You are that asset. And whilst we hear on the news, waiting lists are long, and you don't need to ask anybody, just on a day you're not well, just try reaching your GP, just try calling. And many people are nursing illnesses for longer than they need to because just can't get through. Try again tomorrow. And I'm so grateful for the NHS. It's a beautiful system. very, not many places in the world have that. But private medical insurance is a plan that you can pay for you and your children and your family and your spouses to get quick access to specialists when you need it. They pay for consultations. A lot of them have virtual GPs now. Talking therapies, really hot on there. A lot of claims from that. Last night we were really talking about mental health. How are you really doing? And then health cash plans are policies that you can take out just to pay for dental care, optics. So they tend to give you refunds on once you've paid for certain things, going to the optician. But your private medical generally covers more holistic, serious things, whereas the health cash plan tends to be cheaper. But there's something in there for you. There's something that you can afford to put something in place. And I always remember, once upon a time, someone who hadn't bought a house yet. Some of you here have not yet got there. The journey, things happen in time and you're not there yet. And it just hasn't happened. You haven't managed to save enough. You've had bills. You've had 5 kids to feed. All sorts of things can, affect where we are there. But they had a life insurance policy and sadly passed away. And guess what? It was enough to pay for a home for their family up front. So, it can be good news even after bad news. And it's just having that view that then you don't worry. Yes, I would love to do this and I'm working towards this, but if it doesn't happen, my aim and objective will still be fulfilled through some of these tools, some of these things that are out there. I've put a will in place. I really wanted to accomplish this, but I'm going to put all the formulas, all the things. Anyone who comes and picks this book up will know what to do with it. That's what your will is. If you don't put it down, you're literally saying the 24 hours that I spend and I wake up at 5 a.m. and I do this and I do that, you're just in survival mode right at the bottom. We want self-actualization. We want to build legacies that last. What is waiver of premium? Waiver of premium is a premium on an insurance that makes sure that if you're off work sick, it will still be paid out anyway. The premium would still be paid on your policy. So you're not dead, So the life insurance isn't going to pay because you're not dead, but you're sick. And actually, you're not working. So if you don't pay the premiums, you're going to have to cancel the policy. But no, you had waiver of premium on the policy. So the policy will keep being paid. Death is arguably, one of the worst events that any one of us will ever have to experience. And with our loved ones, if you love deeply like I do, I just want us to live forever and seeing each other forever and spending time together forever. But you know what? When you are in Christ, you know that it's literally a transition. When you go, it's not the end of the world. There's life after death. But there can also be good news, some light at the end of that tunnel for those who are left behind, because you've put some things in place. That dream to send your child to Harvard, even if you are not around for the graduation, your policy can speak for you and make sure that there's enough money for your child to go. Whole of life insurance is used typically, for inheritance tax bills. Once you've built your empire and that wealth is shooting out there, and if you died and no planning has taken place, in the United Kingdom, inheritance tax is about 40% IHT over the threshold. So people set up policies to protect that. And I remember years ago, a lady walking into the bank when I was a cashier, probably over 20 years ago, with a check of £120,000 to HMRC. And I said, what's that for? She's like, oh yeah, I lost my dad. It's to the tax bill for his estate. And I thought, what? And she had a little baby in a buggy. And I thought, 120,000. I mean, 20 years ago, you could buy a house, a very decent house with that, But because things were not certain, you're not checking, okay, what's my asset value now? Where are we at now? okay, do I need to do something about that? Family income benefit is a cheap way of, an effective way of doing life insurance. Nowadays, Blessing was talking about scammers. Scammers are having a field day when they see on your Facebook, oh, I lost my aunt, I lost my mom. They're already are a target. They say, where are you living? Oh, England. I'm sure they had a policy. They know you're about to inherit, you're about to come into some money, And when you're vulnerable, you're frail, you're not altogether there. Your mental health might not be, you're more susceptible to fraudsters. You're more susceptible to, emotional spending, And typically 4 or 5 years, that money is like a windfall. It's like a lottery win. It's gone. But, things like family income benefit plans, especially when you've got a young family, just means that the money keeps coming a little bit drip feeds. And it's as if you're still alive. They still get a paycheck every month or at the beginning of every year, a lump sum. So what we're here to do is talk to our clients and create bespoke strategies for where you are at in that foundation. Some of you are going to go into partnerships. I can see some amazing collabs here. I've already identified them. And, you put in 20 grand, I'll put in 20 grand. Let's work together. Let's do this. Keyman insurance cover, ensuring that if one of the directors dies, what happens? The family might come and say, hey, now I'm going to be... And they were not part of the partnership. They were not part of that deal. Would you want someone else making decisions on a business and your partner's gone? No. So putting those sort of things in place is important. You are the most valuable asset. And Pastor Stella this morning was saying we're unlocking wealth because it's within us. That's it. You are it. And you can leave a legacy behind that anyone who comes after you can look and be grateful that you lived. You can design an incredible structure, build it up, prioritize making decisions that look after you. And I just want to share somebody who really totally inspires me whenever I think about it, because I'm a writer. I always think about William Shakespeare. And I go to Stratford-upon-Avon so many times, and I get blown away each time that a whole village is eating off the work that this lay preacher, and he was a lay preacher, did years ago, used his gifting to provide entertainment, writing plays, scripts for people, And that's what we want to do. We want to all come out of here really just go and flourish, And today, to be or not to be is the question that everyone is saying to be. Will you be or will you not be? This man left a legacy that is still speaking all over the world because he did what he was born to do. And it's wealth that is feeding families in a little village in United Kingdom because of quotes that he did, of plays that he wrote. There are people who are on Broadway right now doing Shakespearean plays. There are people in villages that he never ever went to that are acting out the work that he did. That because he took what was within and brought it out. So, as a mortgage advisor, protection advisor, I always say, what, if you can't rule it out, factor it in. It might happen. We don't want it to happen, but it could do. And the argument that most of us have in our minds is getting over the fact that it's a waste of money, insurance. If I don't claim, I don't get paid. But yeah, if you don't have an accident with your car insurance, they're not going to come back at the end of the year and say, there's your money. But that's a piece of metal worth 5 grand, 10 grand, 50 grand. You are the most important asset. Build structures that last. Create a legacy that no matter where or how or when, no one knows when, boom, you're going to be plunked out. You can still speak, even from beyond the grave. You can still impact. There was this grandma, oh my gosh, she set up this fund and she did this, and there was this granddad, that wealthy place, that generational wealth, you can build it. I can build it. Thank you.
Because you don't see it.